So in today's video, we are talking about 5 monthly dividend stocks that will help you pay your bills and live life on your terms by creating financial freedom. And we are starting right now. Hey, what is up everybody? My name is Shaun. I am a life, finance, and fitness coach helping people create the breakthroughs needed so that they can live life on their terms. If you are new to my channel, welcome. If you are all about money, investing, entrepreneurship, then honestly, this is the channel for you. So after watching this video, please be sure to check out some of my other videos. In the description box below, I'll leave some links to things like my website, some of my programs, but most importantly, some of my popular videos that I think would really benefit you in your financial journey. Now, if you're not new to this channel, welcome back. Thank you so much for tuning back in. If you have not done so already, please be sure to hit the subscribe button, that little notification bell. It just pushes that YouTube algorithm, lets it know that these videos are very useful and that other people could use this information. Now, I want to talk about monthly dividends because dividend investing is something that you should be doing, and it should be something in your portfolio if you want to build passive income, because that really is the goal of creating financial freedom, having your money work for you. Imagine being able to every single month open up your account and have money deposited into your bank for doing absolutely nothing. Now, I've owned a lot of things like businesses and real estate, rental properties, things like that. And while there are some forms of passive income in those things, to be honest, there really is a lot of work associated to it as well. So it's really not so passive. What I love most about dividend investing is that it really is the most passive form of passive income. It's one of the few things you really can just put some money in, not do a thing, and actually collect money every single month or every single quarter. And be sure to watch the end of this video because some of these monthly dividend payouts are upwards of 10% or more dividend pay. So the very first monthly dividend stock on our list is the Gladstone Investment Corporation with the ticker GAIN. So the current stock price of GAIN is $11.28 with a dividend yield of 6.9% paid monthly. Now, GAIN is a BDC and it is a smaller company, but it has performed really well. GAIN's portfolio spans 28 different companies and 14 different industries, so they're very diversified. And the other thing that I really like about them is that their return on equity is almost 31%, which is astronomically higher than most other BDCs in this area. GAIN's main idea, or what they're really pushing for, is finding mid-sized companies between that $3 million to around $20 million range and lending money for equity stake. Now, what I really like about GAIN, more so than other BDCs, is that they really shoot for a much higher equity stake. So while most BDCs are kind of shooting for about a 10% or less equity stake in the company, GAIN is actually shooting for close to a 25% equity stake with a 75% debt ratio. Now, while this does mean that there could be a little more risk involved due to the higher equity, the great thing about it is that they have performed very well, and it also means much higher potential dividend payouts because of it. So the second monthly dividend stock on our list is Pembina Pipeline Corporation with the ticker PBA. Now, the dividend yield for this company fluctuates between 5 and 6%. So what that means is that for every $100 that you invest, you can expect to get a $5 payout. So PPA is a Canadian midstream energy company that helps with the transportation and storage of oil and gas. This company has a pipeline capacity of 3.1 million barrels and also has a ground storage of 11 million barrels, which mainly serves the North American fracking industry. Now, energy use and production is on the rise, and one of the things that really stood out to me about this company compared to some of the other companies was that they have partnered with TC Energy recently, which will help with renewable energy. And they're going to help with carbon dioxide transportation and a capture system that helps companies get to a net zero emissions goal. Third monthly dividend stock on our list is Realty Income Corporation with the ticker symbol O. As of this recording, their price per share is around $69.94, and their dividend payout is 4.23%. What makes this company very unique is its dedication to its monthly dividend payouts. And as of late 2021, they have made 615 consecutive monthly dividend payouts. They are referred to as the monthly dividend income. And also the S&P 500 put it on its list for dividend aristocrats. Now, Realty Income Corporation is a REIT, which stands for Real Estate Investment Trust. And if you don't know what that is, essentially what you're doing is you're investing in a company that then takes pools of investor money and goes and buys real estate, manages it, takes care of the property, and then pays you a dividend or monthly income because of it. So this is a great way of investing into real estate without having to deal with all the hassle and headaches of being a landlord and all that. The other great thing is that you can buy and sell at any point, so it's a lot more liquid than going and buying your own real estate in general. Another awesome thing about Realty Income is that they recently acquired a company called Realty, which is a company that also does real estate, and this will help them add 3,500 extra properties onto their sheet, which will then bring them to 10,000 plus properties owned. And since 1994, when they first started, they've had over 112 dividend payout increases, totaling a compound growth of 214%. So now be sure to stay to the end, because the very last stock that I talk about pays almost 10% dividend yield. And if you haven't done so already, please be sure to smash the like button, hit the subscribe and little notification bell as well. Okay, so the fourth dividend stock on our list is the Pennant Park Floating Rate Capital, with the ticker symbol PFLT. Now, Pennant is currently trading at $13.16 per share with a dividend yield of 8.66%. So Pennant is another BDC, and what I really like about this company is that they use what's called a first lien debt. And essentially what that means is that they're going to be the first people paid back in the event of a bankruptcy. And this is just a great way of hedging extra risk in the BDC market. Now, they do this through a process called floating rate loans. And essentially what that means is that the loan adapts to the current market conditions. Now, Pennant is a super diversified company with over 100 companies in its portfolio among 43 different industries, 87% of those companies being on a first lien debt. Okay, so the fifth and final monthly dividend stock on our list is AGNC Investment Corporation with the ticker AGNC. Now, this is what's called an M-REIT or a mortgage REIT, and it has the highest dividend payout of this list with a 9.49% dividend payout and a current price at $15.18 per share. So this company has over a $103 billion investment portfolio, with $99 billion being mortgage-backed securities. One of the reasons why I think this is a great time to be buying AGNC is because over the last 5 years, it has dropped about 19%, and it's in a really good buying range category. Analysts have set the median buy territory right around $16.75 with a high side of $18. So when it's at $15, this makes it a really good buying opportunity. Now, one of the things that you want to keep in mind when investing in M-REITs is that they are highly susceptible to interest rate fluctuations. So these companies tend to do the best when market rates are steady. This is something to look out for, especially since there's talk that mortgage rates will be increasing. So when mortgage rates rise unexpectedly, the short-term debts that they go in for also begin to rise. And what that means is that their profit margins begin to reduce dramatically because of it, meaning that it becomes harder for them to pay back the investors their dividend payouts. But on the other hand, it's also bad when market rates go down unexpectedly. And this is simply because typically if rates decrease too quickly and unexpectedly, a lot of times borrowers will refinance and pay off their mortgage prematurely, thus also affecting the profit margins. So these stocks do best when markets and interest rates stay steadily over time. Now, in my opinion, there's 4 things that you should be looking out for considering as you pick the stocks that you're looking into. And these are the 4 things that I was considering when sharing these stocks with you. So the first thing is the dividend yield payout. And this is essentially how much money you are getting back per year. So let's say that you're investing $1,000 into a dividend stock that pays you a 10% dividend yield. What that means is that over the course of the year, you're going to earn $100. Now, because we're looking at monthly dividend stocks, that $100 would be paid to you over 12 installments. Now, the natural thought is, okay, so I should just look for the highest interest paying dividend stocks. While that is a natural inclination, we have to understand that typically the higher the dividend payouts, the more risky the stock is. Typically, really good dividend stock payouts are going to be somewhere between that 5 to 7% per month. The second thing to consider is the company's dividend payout ratio. This essentially tells us how much of the company's net income is going into paying dividends. Now, some things to consider. If you see a negative number or a number over 100, that actually means that the company is borrowing money to help pay back the dividends. So this is something that you should really look out for. Number 3, history of dividend payouts. So like I said earlier, even though the natural inclination is to find the highest monthly paying dividends, What will happen many times is that companies will lure people in with really high dividend payouts, especially monthly. And what will happen is over time, that will start to go down. Or if the stock is not performing well, you'll start to see a big drop in dividend payouts over time. So what we want to do is find stocks that have a history of paying really good, consistent dividend income. And the fourth thing is the value that the company provides. So I like to really look into what is this company providing? Is it something that I think has a future, or is this more of a trend? We have to keep a few things in mind. First off, most dividend stocks pay quarterly, not monthly. So if you're looking at monthly dividend stocks, there's really only about 60 of them. And most of these are going to be very terrible investments because most monthly dividend stocks are what's called closed-ended funds. And this basically comes with a lot of fees and a lot of costs associated to that, even upwards of 2% or more. Now you might be thinking, okay, 2% doesn't really sound like a lot, but let's look at this for example. Let's say that you had $100,000 and you invested it into a fund that earned you 6% every single year, and you held on to that fund for 25 years. So let's assume that you had no fees or no costs associated to that fund. That $100,000 would turn into $430,000 over that 25 years. Now let's take that same $100,000 and invest into a fund that has a 2% cost to it. And just like the other fund, you hold it for 25 years and you're getting 6% return, other than the fact that you're paying 2% in fees. How much do you think that $100,000 would be? Well, if you said $260,000 and you were right. So that means that that 2% in costs that you're paying cost you 40% of your profits. So this is why your costs are so important. Now, like I said, there's only about 60 different types of stocks that will pay monthly, and most of these stocks are gonna come from a few main categories, and that is REITs, which stand for Real Estate Investment Trusts, and also BDCs, which stands for Business Development Corporations. Now, business development corporations are simply corporations that will lend money to small and medium-sized companies. So these are companies that probably range in size from around 2 million to about 22 million. So companies that aren't quite big enough to hit it on the stock market yet, but they're also pretty decent size to where maybe they don't want to use traditional banking to get a loan. So these BDCs will lend out money for exchange an equity stake of that company. So you can look at BDCs as almost like this hybrid between a bank and private equity. Anyways, those are the 5 monthly dividend stocks that I have on our list. If you like this video, be sure to smash the like button, hit the subscribe button, little notification bell as well. It'd mean the absolute world to me. Be sure to check out some of my other videos if you haven't done so, and let's get out there and let's build that dream.